evening, unit holders of ESR-REIT, and welcome to this dialogue session on ESR Sabana REIT merger. Tonight, I'm happy to have with me Mr. Adrian Chui, CEO and Executive Director of ESR REIT Manager, and later in the panel discussion, I'll invite Mr. Donald Han, CEO Sabana REIT Manager. On December the 4th, unit holders of Sabana REIT and ESR REIT will vote at their respective EGMs on a transaction under a scheme of arrangement. The vote will only be determined by minority independent shareholders. In order for you to make an informed decision, SIAS has organized this dialogue between unit holders and the management of ESR and Sabana to provide you with the details of the merger and to address any questions and all questions regarding the merger. SIAS has earlier recorded a dialogue session on the issues around the merger, which we have publicized. This recording should give you some insight into the rationale about the merger. Today we are here to address all your questions. So please send in your questions via the Pigeonhole link provided, and we will attempt to answer them within the time available. Before we proceed, let me set the context and canvass the issues so that we can have them addressed for your benefit. All right? This merger has been highly publicized, with two outspoken funds in Sabana that have accused ESR of being in a conflict situation. As ESR, they say, is a shareholder of the Sabana REIT Manager. As highlighted by Business Times today, their issue is that under the merger deal, holders of every 100 units of Sabana REIT will receive 94 units of ESR REIT. Based on ESR REIT's closing price last Friday of 0.385, unit holders of Sabana REIT would be getting 0.362 for each unit they own. This is 3.4% above Sabana REIT's closing price on Friday of 0.35, but it is 29.3% below Sabana REIT's net asset value, they argue, as at June 30th of 0.512 per share. By contrast, ESR REIT's closing price on Friday of 0.385 is only 2% below its NAV as of June 30th of 0.41 per share. On 18th of November 2020, Quas and Black Crane issued a letter proposing the removal of Sabana REIT's existing manager and internalizing the Sabana REIT management function. Both Quas and Black Crane also suggested 5 levers for increasing DPU by more than 30%. The question is this possible? Quas and Black Crane have also requisitioned an EGM to, among other things, suspend all actions relating to the proposed merger. Some ask the question, is ESR Cayman the ESR REIT Manager, making the Sabana REIT Manager push forward with the proposed merger despite the latter's receipt of Quas and Black Crane's requisition notice? With the current COVID-19 situation and market volatility, some asked, why proceed with the transaction? Is this an opportunistic proposal taking advantage of depressed unit prices amid the pandemic? Why not postpone the transaction to a later time when market is more stable? These questions and many more will be taken both by Adrian and Donald tonight, with me later on the panel. Can I request that you send in all your questions early so that we have time to address them? To kick off, let me hand over the session to Adrian Chui, CEO of ESR-REIT, to take us through the details of the merger proposal. After the presentation, we will proceed to the Q&A where Donald will join us. Please submit your questions now and we will address them. Over to you, Adrian.
Thank you, David. Good evening, everyone. Thank you for taking the time to attend the dialogue session. I would like to, when we first announced the proposed merger on 16th of July, the rationale was very clear. In the REIT space, bigger is better, and this merger will solidify the enlarged REIT's position amongst the top 5 developer-backed industrial S-REITs in Singapore. This slide shows that the implied offer price payable to Sabana unit holders is based on a gross exchange ratio of 0.94 times, and it's not a fixed offer price. Let me reiterate that in this transaction, it's a share swap and it's neither a sale of assets nor a privatization of portfolio of assets. Unit holders from both REITs will continue to be invested in the enlarged REIT. Once the merger completes, the enlarged REIT will grow from 57 properties to 75 properties with an aggregate asset size of 4.1 billion Sing dollars. Let me now expand on the key benefits of this merger. First, the merger is expected to be value accretive to our unit holders on a historical pro forma basis. As you can see on this slide, the merger will be 3.5% DPU accretive and 5.2% NAV accretive to all ESR-REIT unit holders. Secondly, the merger with Sabana REIT not only enhances our diversification, but will give us access to more high-specs assets and well-located logistics facilities. As we all know, logistics is one of the key pillars in Singapore's economy and will continue to be relevant with regional cross-border trade and consumption. Meanwhile, on the manufacturing front, as Singapore's manufacturing base gears up to adopt Industry 4.0 model, this necessitates us to develop or acquire assets so that our portfolio continues to be relevant and future-ready. The Sabana portfolio increases the exposure to these two segments with potential for future enhancement and enlarged floor area through portfolio optimization. With a larger size, we retain the flexibility to better execute asset enhancement initiatives and redevelopment strategies at a lower cost of capital. Next, a large portfolio will also significantly reduce tenant concentration risk. Contribution from our top 10 tenants will reduce from 31% to 25% of our gross rental income. At present, we have 343 tenants, but post-merger, we will have more than 450 tenants with diversified trade mix. And our top 10 tenants will account for less than a quarter of our gross rental income. In addition, no single tenant will account for more than 4.1% of the enlarged REIT's gross rental income. On this slide, you can see that Sabana REIT's properties are located in key industrial clusters in Singapore. Many Sabana's REIT's assets are located close to our properties, and this allows us to improve economies of scale, like across leasing, marketing, asset and property management once we are merged. Furthermore, our customers can also benefit from the wider choices and cross-marketing activities. Besides improving economies of scale, a larger size would also bring about opportunities for operational synergies and portfolio optimization, where there can be further potential cost savings for tenants and stronger bargaining power with service providers and tenants. With a larger vehicle, we are also able to realize AEI opportunities and develop unutilized gross floor area at a cheaper cost. In addition to the existing 1 million square feet of unutilized GFA, Sabana will add on another 1.2 million square feet that together we can develop at a lower cost of capital and with lower leasing risk. With an enlarged asset base, our DPU is less likely to be negatively affected when we undertake AEI and or redevelopments when the buildings are closed off for construction, which can easily take between 12 to 24 months. Again, there are numerous organic growth opportunities as part of the enlarged REIT. We can have access to a wider pool of tenants from a range of industries and also leverage on our existing tenant relationships and our sponsors' network to execute tenant expansion, consolidation, and relocation plans for our tenants. As mentioned in my introduction, size truly matters, and on this slide, you can see that the enlarged ESR-REIT position will be solidified amongst the top 5 industrial S-REITs. Here, you can see that Sabana's debt is about 94% secured, leaving it with limited financial flexibility to undertake AEIs to develop its unutilized GFA or acquire new assets. Let me emphasize that since REITs do not retain any earnings, continuous access to capital is very important. As an enlarged REIT, we will be refinancing the existing Sabana REIT debt with a fully unsecured new loan at significant lower cost at a longer debt tenure. A fully unencumbered 4.1 billion asset portfolio gives us access to wider pools of capital and allow us to retain balance sheet flexibility. As a result, the enlarged REIT's cost of debt would fall, and we will also enjoy a longer weighted average debt expiry. With size comes liquidity. A larger REIT is more likely to be included in key indices, which gives us access to a wider and diversified investor base, increased analyst coverage, and potential stock price re-rating. Being an index stock provides us access to larger pools of capital and consequently lower cost of capital. On our sponsor, we have a first look on their assets of more than 2.6 billion of portfolio assets located across Asia. The enlarged REIT is able to access ESR Group's overseas assets more meaningfully without altering the overall portfolio risk profile greatly. Since becoming our sponsor, the ESR Group has transformed the REIT by providing strong capital support and financial commitment. ESR has backstopped all our preferential offerings in the equity fundraisings to date. We expect the support to continue given that we are the namesake REIT of the ESR Group. Finally, you can see that ESR's independent financial advisor, Rothschilds, has opined that the proposed merger is on normal commercial terms and is not prejudicial to the interests of the REIT and its minority unit holders. Rothschilds has therefore advised the Audit, Risk Management and Compliance Committee and the recommending directors to recommend that unit holders vote in favor of the proposed merger. We will be convening our EGM on the 4th of December at 10 a.m. If all resolutions are passed during the EGM, including that of Sabana REIT, then the merger is expected to be effective by the first quarter of 2021. Lastly, let me also say that it is our job to find value-accretive ways to grow and or reduce the risk of the REIT for the benefit of our unit holders, and that is what we are doing here. We strongly believe the terms of the proposed merger are fair and will result in a win-win outcome for both sets of unit holders. And the IFAs have also given positive feedback. Unit holders should consider the long-term strategic benefits of a bigger portfolio. The need to be larger, more sizable, and more diversified has become more important, as we will be better positioned to weather any challenges ahead and remain relevant. The outcome is in the hands of independent unit holders, and we urge everyone to evaluate the proposed merger objectively and in its entirety. With that, I end my presentation. I will now hand over to David
to
kickstart the Q&A.
Thank you very much, Adrian. So we are now opening for questions so that I could ask these two gentlemen to answer your questions. Let us have the first question. So whilst they are looking for the question, let me ask, what really is the problem here? I mean, Quartz and Black Crane, they issued a letter proposing the removal of Sabana REIT's existing manager. They are objecting to on the basis of conflict of, I mean, is this true? If not, tell us so that they can understand clearly this. Is it a smokescreen or is it what?
Okay, so if you look at their claims in that sense, they have actually asked a lot of questions, and they have also painted scenarios on their side. They have 5 levers where they propose through this activation of the 5 levers, they could look into enhancing DPU, for instance.
Yes.
Actually, that component itself in what they propose have raised more questions, more doubt in that sense. And we actually responded on the 20th of November, just last Friday, a whole long list of questions requesting more clarity and how do they do it. Out of that list, let me just try to summarize 3 main points. One is on the part about they say they can easily find individuals to be able to have a capital market license to be able to run the new internalized manager.
Yes.
Of which, importantly, questions would be who are these individuals and are they familiar with the local market over here? And because you need to have them recognized by MAS. So we need to know who these people are. Second point, they have actually indicated that they have got financial institutions who are very interested in refinancing Sabana REIT's existing loan. And I think most importantly is that they said they can bring down the cost of funds from 3.8 to 3.2%, of which, based on our interim business report, which was released a few months ago, we are already at 3.2%. So they're saying they can do it better. And for information, ESR have already gotten a signed bank commitment at 2.5%. So again, the question here is that if they have approached banks, they need to first approach our banks because if they don't, any change of managers will constitute a breach of a cross loan on our side, and that will put unit holders at risk, unfortunately. So it's a major issue on that side,
I also want to add, that they have come out with a lot of questions on the 5 levers to increase DPU by, I think, somewhere 30% or 40% DPU uplift. And they put the statements with the 5 levers. Actually, Donald and I were very surprised. A lot more questions in our mind than trying to, because
you feel it cannot be done.
Yeah, I mean, we would like to understand what is the basis, what is the assumptions. There are at least 10 questions in our mind that we actually have that we can't fathom. I'll give you an example. They say that the 33, 35 Penjuru redevelopment, you can do the redevelopment, and they said, and they gave a price of $100 million on that. But when we look at with the Penjuru the site, look 100 million, and we work backwards, the construction cost that is being implied, it's not realistic. It's much higher.
So they don't understand the local market? They don't seem to understand how we work here.
I mean, if they're really right, I would like them to recommend me who's a contractor. I would love to use that contractor because I don't think we can get the construction costs.
You've been in the property business for the longest
exactly.
time.
So if you look at some of their assumptions that they say New Tech Park, which is our flagship, which consists 1/3 of our entire portfolio, they say, easily you can put in more than 250,000 square feet of additional gross floor area. To achieve maximum plot ratio, we can only do 200,000 square feet. So they say can do more than 250,000, which means it exceeds master plan plot ratio. It's interesting to know, have they consulted authorities or who their consultants able to get higher than that? And most importantly, I think what they're trying to say is that they can increase DPU by 20% by even taking out one of our property, which is 33, 35 Penjuru Lane, where they say you can take out the tenant and redevelop. Every time you take out a tenant, it creates a dent on your DPU because 5%, 6% of the net property income is affected. So how you achieve that 20% over a period of time, nobody knows. But most importantly, they must get our property correct. If they want to be treated seriously, they said our property, one of them is 32 Penjuru Lane, which we don't have that. And they got a lot of information wrong, like for instance, cost of funds, 3.2. We're already achieving that in that sense. So they should test.
In fact, you got commitment for 2.
Well, I have a commitment. The commitment was even announced on 16th of July. So when we do something as professional fund managers like us, we don't like to go into the situation whereby we don't like to have a you thought, I think, who confirmed kind of situation. We want to make sure that when we put something, the basis is there, the numbers are there, because we're talking about serious numbers that is for unit holders. We need to have that. And when we say that we can refinance a debt with that's cheaper, we show you the committed debt term sheet. We show you, we tell you who are the banks, what is the debt terms, and what is the price. So we do that. And this is very important so that unit holders have full information to do that. And And that is why we're very puzzled by their claims, the claims of 20% DPU upside. We can't work it out, the numbers. Like $100 million, how are you going to fund it? Is it equity? Is it debt? What is assumptions of the funding cost? What is the equity cost? Are you going to do the fundraising? What's the discount? All this, and we can't work it out. And then when you take into consideration redevelopments, whereby there is a need to close down the building, you lose income. So you lose income before you earn income. So how do you get that plus whatever's the number? And it's just one of the many questions that we have that.
Yeah. So you're open to questions, suggestions.
Yes.
But you got to have basis, and you got to be convinced that these suggestions will work, are workable, and would indeed be the way to go.
Yes.
But you are unable to, find the basis.
We can't make sense out of it. And importantly now, voting via proxy has already commenced already in that sense. And it's important as unit holders, while they're watching and looking at SIAS dialogue like this, which is very important because it's transparent, is based on scheme documents, detailed, which has been analyzed by financial advisors. And it's also been recommended by our independent financial advisors that these financial terms are deemed fair and reasonable. So there's a whole lot that unit holders can review. But at the same time, when these hedge funds come up with their own proposition, which are lack of details, I think it's not fair for unit holders to be able to make a decision, unfortunately.
So are you suggesting, or do you feel this is causing confusion?
Yes, it causes confusion, and it also leads to my answers to the next question, David, if you don't mind.
Sure.
Is that I read it out.
Yes.
Is that
why did you make a no price increase statement less than a month after the proposed merger was announced? The statement has left you with no room for negotiation.
Two reasons. The first reason is this: we have analyzed, as Donald said, we have negotiated, we have analyzed the transaction based on the portfolio, the risk of the portfolio, any potential upside, the debt capital structure, how we're going to fund it, what is the basis of the funding. So we've negotiated, and it's not an overnight thingy that Donald and me made in Starbucks and decided this is the price. And there are professionals who verify that. Professionals who see that, Adrian, when you say it's 2.5%, where is your debt term sheet? We showed it. So that's the first thing. It's heavily negotiated before we come up with the proposed terms. Now the second part is relating to you and relating to the point previously is when the two hedge funds decided to put out the statement, it confuses everybody. It creates so much uncertainty in the market that my share price starts to come down. And I have to be responsible to ESR-REIT unit holders, because every 1 cent that comes down, it wipes 30 to 40 million off my market cap. And I have to be responsible to my ESR-REIT unit holders. That is why I have to come out to make the no price increase statement to say that, look, we are not this. We've analyzed it. We think this is a fair price. This is a fair price that balances both parties' interests. From a DPU, NAV, accretion, dilution perspective. For example, for ESR-REIT unit holders, this transaction is NAV and DPU accretive, but our DPU accretion is only 3.5%. Sabana's is 12.9% on a historical pro forma basis. So we have to find that balance. So it's to remove the uncertainty, and that is why I have to put out the no price increase statement, because we have done our job as professionals, deliver a proposed terms we believe that as fair, and if there are noises in the market and with unsubstantiated claims and confuses the market as to what is the possible deliverable of the forecast that these two funds claim to be 20 to 30%. And I have to come out and say that, no, this is my final price. And this is what it's worth.
Yes. Quickly, Adrian, list the 3 biggest advantages of this merger for your unit holders, both sides.
For me, it's basically size and get myself into higher, in a pole position to get into the indexes. Getting into the indices basically gives me a wider access to capital as well as lower cost. And the other one is that it gives me operational flexibility to undertake all the AEIs without impacting the DPU that much. Essentially, we get into a virtuous cycle, not a vicious cycle, into a virtuous cycle. As you get indexed, you get bigger, you get better access, cheaper cost, you can do more and do faster, increase your DPU. And as you get bigger,
and the unit holders benefit.
And the user benefit for higher DPU,
yes.
DPU as well as growth in NAV.
Donald?
I promised my unit holders 3 years ago when I came on board as Sabana REIT CEO that we implement certain strategy lah. And we are in the midst of halfway through where we're doing AEIs in that sense lah. And one of the issues really being small is really not sexy lah, in the sense that we need to have firepower. We want to do more AEIs on the basis that we have underutilized plot ratio, and a lot of our properties are between 15 to 20 years old. And in that sense, for us to be able to go out there and attract the high level, high specification type of tenants, we need to upgrade our properties. And it is through this merger, by having a stronger, more diversified portfolio, that we can move tenants out through swing space and without affecting our portfolio, our DPU in that sense. Being small, any property which I shut down will have a more impactful effect onto my DPU, my NPI in that sense. But being larger, it will not create a dent at all. So that is basically what we're trying to achieve here.
You got a lot of retirees who depend on your DPU.
Correct. A lot of our retirees. We have a lot of retail investors.
So you have to be very careful about how you do things.
Absolutely.
Yeah, absolutely. That is why when we say something, we back up with basis, rationale, and that professionals comes in to check us, accountants, legal, and we do something big like this. We have IFA opinions. This is for the purpose of protecting the interests of our respective unit holders. Simple. Yeah.
Can management explain the risk factors that unit holders should be aware of with Sabana operating as a standalone unit and post-merger with ESR-REIT?
Maybe.
Is that the correct statement?
Yep, sure.
I think post-merger, well, the shorter-term risk is obviously getting operations integrated. You know, yes, you need same industrial sector, but again, real estate is a live game. It's not about pressing a button and tomorrow everything will work. You know, accounting policies, how we do things, how we approach things, that is immediate. Okay, it's always risk when you do integration.
Yes.
Some get it right, some get it wrong. The second risk is for us to actually then potential risk for us to sit down and say, okay, we will have which AEI should we go first? Do we plan which is a short-term one, which is a medium term, which is a longer term one? There are some AEIs will need a longer-term planning because you have to go through regulators in terms of the URAs and LTAs. Or sometimes we may need to lobby, you know, depending on what plans that we have.
They're all local properties.
They're all local. We're all 100% pure play after that.
And no intention of going out to buy.
Yes. I think that's where I'm coming, David. You're smart. You're very, very smart to anticipate that. And concurrently, we have to start looking at overseas because fundamentally, for Singapore industrial, it's very different from office or hotels. Two fundamental differences. Number one is the land leases for industrial assets in Singapore is very short.
Yes.
It's a structural. 30 years maximum, right? They have a lot more 30 years. Obviously, there are some who are 30 plus 30, but those are really very old grandfathered ones. So that is a structural risk. And that has an impact on valuation. And we don't deny that. There has an impact on valuation. So that's why we have to go overseas to get freehold or longer land leases of 99 or 999 years to actually address the structural risk.
Tell me where you're going and put it on the the SGX tonight.
No. I don't worry. It's already on SGX net. You know that we've always tell the shareholders when we want to go overseas, we want to be in footprint countries where ESR Group, as ESR Cayman have. ESR Cayman is in Pan Asia, China, Korea, Japan, Australia, India, as well as lastly Singapore. Now, why do we want to go to these countries? Australia, probably immediate is probably Australia.
It's also a REIT country.
Exactly, that is transparent. And why is these countries, David? Why do we want to follow the ESR footprint? Very simple. Real estate is a local game. You need that platform. You need your people to be there. In terms of the platform from operational, leasing, marketing, property management, to look after so that the overriding objective is you understand the market that you're going into and you can manage the overall risk.
The primary objective?
The primary objective ultimately is to make sure that our unit holders get the returns at a balanced and managed risk.
Better than, much more than now.
Yeah, correct.
You're saying that tonight?
Sorry?
You're saying that tonight?
Oh yeah. I'm saying that with a larger portfolio, you can actually have that buffer.
Yes.
So if you look at our strategy, well, we are in the midst of our phase 2 refresh strategy where we're doing AEI, but phase 3 is basically to go and acquire properties and to look into regional properties as well. I think that's where the merged entity will be able to realize this sooner rather than later. Unfortunately, being standalone and in the midst of pandemic, we have to wait and see and wait for pandemic to pan out.
And your capacity is limited, but together.
Yes. Together we can. So right now, I'm a boat, and I see a faster, bigger boat that's got a faster speed is coming, and we are looking into hopping into this and to continue the journey and to be able to realize and get higher growth for our unit holders.
What is the advantage you see of them coming on?
For the merger?
Yes,
Yeah, as I said, we get size. We are buying into we are merging with an entity that is in Singapore. We understand the business, so we can manage the risk. We know how to do AEIs. We know how to plan the AEIs. As being a large size, we get ourselves we have the house. It has a higher potential to be included in indices. The key in this is being the ESR REIT, and I can explain this now already. The benefits of being included in indices. When you're included in indices, your access to the pools of capital is big.
What's your role, Donald, in this new merger?
So I hope to be able to join the new enlarged entity.
You are
as
Mr.
advisor.
Property here.
Yeah.
I'm Mr. Property over here, but again, property is in my vein. Like I say, it's DNA. It's all real estate in that sense.
Right.
So I hope in the enlarged entity, as an advisor, we could continue for Sabana unit holders with the vision of, through a refresh strategy, to work with Adrian to be able to prioritize which particular portfolios that we can actually look into the low-hanging fruits to do AEIs and redevelopment potentially.
Yeah.
I see a lot of excitement on both of you.
We are. We are still young. We are still young. Energetic.
Well, we'll be watching. So, with the current COVID-19 situation and market volatility, some ask, why proceed with this transaction? Is this the right time to proceed? What is your response, both of you?
Well, if you ask me, there is really no right time. Now is the right time in that sense. Let me give you an example of what transpired end of last year. One of our property in Jukun Circle, where a master tenant lease have expired, 200,000 square feet, and they wanted to move out. They wanted to move within our portfolio. They requested for 300,000 square feet. We did not have any portfolio. And as a result, they moved out, which created a dent in our occupancy end of last year, and they moved and benefited another landlord.
Right.
I would have wished that we had 75 portfolio on a large basis where we could move this tenant into another property and benefit ourselves in terms of enhancing our respective portfolio. In other words, joining forces is really key these days to be able to, tenants are king these days. They can choose wherever they want, and we should keep them within our stable. Yeah. That's key to us.
Well, the world has changed a lot, right? Technological advances has created disruptions. The US-China trade tension is ongoing, and you have the, last I heard, we are still in a pandemic. A lot of these things is happening around us, which means that we need to continue to be relevant. And to be relevant, we have to have size, so that we can have the ability to weather the storms, as well as grab the opportunities that comes along. Even when there is a down cycle in the market. Yes. So that is actually the key in terms of why we want to do it now. Because if you don't do it now, you wait, people gets bigger, and the big boys becomes bigger and move further away from you. It will be a steeper slope to climb, to say the least.
Who else do you have in mind?
We want to merge with Sabana REIT.
I mean, you'll be on the lookout.
Well, we are a standalone REIT. We're the smallest in that sense. So obviously,
I mean, who is my other? We want to be with Sabana REIT.
Other than Sabana.
This I feel is an opportunity. Remember, we have not had any offer in the last 3 years when I was in managing as CEO of the REIT. So I think this is the only offer that we have. And we want unit holders, independent unit holders, to evaluate the scheme documents. We've detailed all the pros and merits of this particular deal, with IFA confirming that the financial terms of this particular merger transaction is fair and reasonable. And it is now in the hands of minority unit holders to vote. And I think they should exercise their voice by voting. We have about 10,000, 11,000 unit holders on our side, and mostly are all retailers in that sense, retail unit holders.
We have more. We probably have, I mean, in terms of number of retail, we have probably about 20,000.
20,000.
But we have more institutional investors, the likes of Mondrain,
So far, the reaction from institutions.
Yes, the institutional investors understands this. They know why. They have also been investing in REITs that are big. They understand the benefits. They truly understand it. The feedback from them is that, yes, they're supportive of this. But at the end of the day, we're still waiting for the votes to come in.
Analyst coverage?
Yeah, the analyst obviously is, well, if you look at the reports when it first came out in July, the analysts are supportive of this merger. These analysts are real estate analysts. They understand what they're talking. They breathe and live real estate, so they know. They're supportive of it. DBS Bank says that it makes sense for both ESR-REIT and Sabana REIT. I mean, DBS covers both the stocks. For us, we have a bit more coverage. The likes of really the CLSAs or the CIMBs, City, they're all positive of this merger. In favor of this. They understand that. Yeah.
See, every time there is a merger, huge fees have to be paid. So the one who suffers is the unit holders. Can you demonstrate the financial impact for unit holders, dilution of unit price, NAV, reduced distribution? Is this true?
No, not true. Not every deal. I can only say what's for this deal. If you look at our circular, we put there, pro forma, the DPU impact is positive. That it already includes the acquisition fees and the fees, so that it's not cash. We don't take it and run.
No.
It's in the form of units. So the manager is again more aligned with it, because you're taking the units, and under the
you suffer, I suffer. That basis.
Exactly. And on top of that, David, the rules require us that we cannot sell these units that we receive as fees for 1 year.
Okay.
Yeah, but there's no intention for us to sell the assets. So this after taking into consideration the so-called huge fees, it is still DPU and NAV accretive. So, and this on a pro forma basis, and this is validated by, professionals. Yeah, correct.
Okay, so you have any other questions? Can management detail specific sources and examples of growth, that is positive rental reversion, AEI, and or asset recycling plans to improve DPU apart from the arithmetic effect?
They're trying to understand what is actually the questions. Well, we have shown in our circular the DPU uplift of 3.5% from ESR-REIT unit holders come from two things. Number one, the refinancing of Sabana's debt, and also the fact that we are able to we're going to pay upfront land premium to the authorities, which has resulted in savings in the land rent. Because once you pay upfront land premium, you do not need to pay ongoing land rent to the government.
Right.
So these two are the savings that actually comes from that, and this one contributes to the 3.5% DPU accretion. Now we haven't entered into the potential redevelopments, AEIs, and increase in occupancy that we could do by our cross-marketing strategies. We need to sit down. As I said, we need to sit down once the merger is approved to have that. But at least you will know that the sources and the contributions of the DPU accretion is there. Because when I say that there's interest cost savings, my debt is there. My debt is there. It's not some fluff thingy that maybe I may have some serious financial institutions interested in financing. No. I tell you who are the banks. I tell you what are the debt terms. So this is where the sources.
I think on my side, you find that we are a smaller REIT. We are 18 properties. We're not geographically spread. And on top of that, we don't have all sectors of the market. For instance, we don't have business park in that sense. I don't have ramp-up logistic warehouse in that sense, which is in demand right now. So a lot of our MNCs who are looking into expanding out from our existing properties, looking for business parks, looking for ramp-up logistics, they tend to give us a miss whenever they expand out. then they grow it out. So it is for us very important to maintain these tenants into the stable of enlarged REIT, which is where ESR REIT's portfolio would be able to accommodate some of these. And a lot of the location, I think we are most concentrated on the southern side. We don't have anything really on the northern side. So again, it'd be able to actually provide a one-stop for our tenants to be able to service them in terms of their geographic expansion in Singapore.
Well said. Okay. Any other questions? There have been questions about Ms Ng Shin Ein's status as an independent director and allegations that she is not in position to act in the best interests of Sabana unit holders. What is your response?
There is no doubt in my mind that Ms Ng has performed well as a board duties, and she is transparent, and there is no conflict of interest altogether. In fact, so much so that we have been very transparent with so-called questions regarding her director independencies and all that, that we have actually responded on the 21st of September to a list of questions, clarification by Prof. Mark in Business Times. On the 5th of October, we also have provided a list of clarifications as well, very detailed. And yesterday night, we actually came out with a list of another set of clarifications, about 10 pages, that detailed how we derived that. At the end of the day, the board of directors for Sabana, which is all independent, have actually assessed the independence of Ms Ng, and have actually found, for the scheme of document, that her independence is cleared and in line with the takeover code in that sense.
This is because of a previous.
She has been very experienced she's a lawyer in that sense. So she has been very experienced, and she's contributed a great deal to Sabana REIT at board level, and we've worked very well with her on a management level as well.
So in the new board, will she be there?
David, if you see my website, I have a 10-member board.
Yes.
Across diversity, experience. This 10-member board is enough.
Yes.
For the time being.
It's diversified.
It's diversified. We talk about any diversity. I mean, we have lawyers, we have accountants, we have real estate guys. We have also directors.
How many ladies?
One, Ms. Stephanie Teo Yuan,
yes,
the director.
She's great. You got her.
Yeah, yes. So we have that. So yeah, I think we have enough directors for us for the size that we have. Yeah.
Given your enthusiasm, your commitment, and your vision, it should not fail. This merger should not fail. But what if it fails?
Well, if it fails, of course, then life goes on. Yeah, the REIT will continue as it is. We will not jump into that bigger speedboat to be able to achieve what we want to do sooner. We'll probably wait for the current AEI that we're doing right now to complete. We have to wait for the pandemic to pan out. It could be next year. It could be 2022. We're not sure in that sense. But we need to go on a preservation mode, as what we've done in the first half of this year. We actually allocated certain cash for prudence because of COVID-19. So what we want to do on an accelerated basis, we'll do it slowly,
yes,
and on a more cautious basis in that sense.
Yeah. I think for us, our business plan will still continue. We still have the exposure to the first look at 26 billion worth of ESR Group's assets. We will continue with AEIs. I mean, we're in probably a better situation, primarily because we are larger. We're 4 times larger than Sabana REIT, and that if you see my latest quarter results, it shows our numbers in terms of portfolio operating matrix from occupancy retention has pretty stabilized, and that is why we pay out our 50% of retained earnings. But having said that,
yes,
while we have a bit of confidence, we still retain 50% because, David, we never know what is going to happen with this COVID-19. We have second wave, third wave coming. Singapore has done well, but you know, three
companies have come forward to say we give you the
and one thing,
vaccine.
Yeah, exactly. Yeah. One thing I would like to also mention is some unit holders actually ask me, hey, Adrian, why can't you pay the guys NAV? How do you arrive at this and it's still a discount to NAV? When we look at offering terms or we buy something, you always look at what is the last transacted price. You look at REITs, and REITs is very clear. NAV is NAV. Valuers give you a guidance, but they never tell you that's the price you must sell. It's just a guide, and that is why banks will tell you there's an LTV of X%, because they're not going to finance you at the valuation. So it's the same. So the best proxy to see what is the worth of a REIT is the trading price, and if you are trading at a certain discount to NAV, well, there's a starting point to let us see. And if you're trading at a premium to NAV, that's a starting point. So that's how we started that, and then we take the consideration, as I mentioned, the assets, the underlying risk, the underlying cash flow, the debt position, and then we fine tune and then we negotiate to come there. But the starting point must be that what are you trading today? Because your trading price is a reflection of what the market believes your underlying assets is. If you're at a discount, there's a reason, and if there is and if your growth prospects is good, then technically you should be trading at a premium to NAV, and it's easily taken. That is why you have seen REITs trading at 60-70% premium to NAV. There are also REITs trading at discount to NAV. For us, we have traded pre-COVID premium to NAV, and now COVID, we are around NAV.
But DPU accretion for Sabana REIT, we are at 12.9%, the highest, and which is why we feel that any metrics in terms of comparison for the merit should be looked into DPU accretion, among other things as well.
Whether they're going to vote or against, really the assessment of will I get better DPU?
Correct.
More assets, you're going to be asset rich, better than now.
Correct.
All right, you're saying your distribution will be better. And if I'm in this boat, I don't know why I want to get out. Right?
You're not selling your assets. You're not selling. You are continuing the journey as an enlarged REIT. You're not only having 57 property or 18 property, you're having basically 75 properties on a large vehicle.
As you said earlier, the boat is bigger.
The boat is bigger. It's an oil tanker that can go into the rough sea, withstand all sea conditions. Unlike what I have right now, being a small boat, I have to go into a harbor to wait for fair weather to come. Then I'll continue my journey.
How will you be doing periodically assessment of your performance, other than just waiting for annual general meeting, annual report, but in between having an investor day, and do communication with unit holders, both. I mean, yourself.
Yes. Definitely, because especially in now the pandemic, and that is why we treat this sort of communication with unit holders, whether you are retail, institutional, very important, because this, especially in times of this pandemic, you need to have more information to go out to the market. That is why for ESR-REIT, even though the rules have changed to half-yearly reporting, right, and which most people would then think that, okay, then you should pay half-yearly distribution, we did not change our quarterly distributions. And if you look at our interior updates, we are quite detailed. We treat it as if it is a quarterly reporting. It is important, and we would want to have investor days to set up with investors, and we want to work with you to see us with that, provide education. And sometimes it may not be related to REIT. No, we can come in and provide education seminars to share with them our experience, what we see in terms of the market changing, trends and everything. And it's all for the benefit of shareholders who wants to be educated more, to learn more, and actually have the critical mind, enhance the critical mind to give us feedback, so that we as fund managers, we can improve. We are not always right. Don't get me wrong. We're not masters of the universe.
You're open to suggestions.
And I have taken in feedback from even retail investors on what I should do, and I've implemented that. For example, ESR-REIT, when I first came on board, the then Cambridge Industrial Trust takes all cash. They take management fees in cash. One of the very first EGM that I had 2017, a unit holder actually says that you should take management fees units, because this shows alignment with us, and at the same time, number two, by taking management fees units, the distribution becomes higher. And all I as a unit holder wants is stable distributions. I agree with him, and that's why we implemented since second half of 2017, taking management fees in units.
Retail investors are very enlightened, and they are very helpful. So the fee It's a 20, what, minus 20?
20 million units.
So 20 million
yeah.
units at 0.401 to ESR Management's or 8.3 million. This will dilute all unit holders post-merger. Shouldn't the seller, Sabana, pay for the fees since they wanted to sell or merge to survive?
No,
to survive?
I don't. No, I don't think it's. I would like to correct it that even with the payment of management fees in units, this transaction is still DPU accretive, and there are trust deeds, and we're following the trust deeds that the payment of the fees on both sides. In fact, if you follow the trust deeds of that we have, we're just basically following them. So the transaction is not dilutive to any of the unit holders.
Okay.
Yeah.
Will the Shariah requirement be dropped, and was this a hindrance to Sabana?
Maybe I answer the first
Yep,
part.
sure.
Yeah. ESR-REIT is a non-Shariah
Yes.
REIT. We are a conventional normal REIT. We have no intention to be
Shariah
Shariah REIT. That is the reason why we'll continue to stay as a convention REIT, and that is the reason why if the merger is successful, we would like to maintain Sabana REIT as a non-Shariah REIT, and that is the reason why we have to actually. That's also part of the reason why we take the new conventional debt to replace the Shariah debt. And I add on to the fact that maybe I let Donald add on to the second point before.
Sure. Is it a hindrance to Sabana? I think it has served us well in the last many years since inception. Of course, we would relook into the scenario, assuming if this merger goes through, then the enlarged REIT will not adopt the Shariah compliant. But if the merger does not go through, then we would we'll have another evaluation in that sense. But if you look in totality in the last 3 years where I've been around, there hasn't been much of cost savings in terms of Shariah compliant, because most of our tenants are all compliant in that sense. There might be just one or two very small tenants who might not be able to come into our portfolio because they does not satisfy the Shariah compliantness, but that just impact a very small component, just 2,000-3,000 square feet in that sense.
Add on to the point.
Yeah.
One so-called criticism was that by removing the Shariah compliance, Sabana REIT will get cheaper debt. That was the claims. I think also by the two hedge funds as well. I think I would like to highlight that banks, and I have experience looking at loans. Banks do not lend you money to the REIT by looking at underlying cash flow stability, the risk, the tenant profile, tenant concentration risk in arriving at their pricing. Changing your religion doesn't necessarily mean your credit rating has gone up. All right.
Okay.
But I give you a classic, a very layman or example. If I earn $10,000 per month and the bank is only willing to give me a credit card limit of $30,000, I change my religion. It doesn't mean that the bank will give me 50,000 credit limit. It doesn't work that way. You still have to look at your underlying cash flows and all that. So I think this is what we're trying to say in that sense. And why we are then able to get the 2.5% is because the banks who lends to us, which 3 of them are the current existing lender, is because they look at the whole 4.1 billion portfolio when they lend at 300 million. Why? Because we're 100% unsecured. They don't just look at the standalone Sabana as a whole. They're lending 300 million to the top and large 4.1 billion, where there's diversified portfolio, no limited tenant concentration risk, top 10 tenants gearing drops, exposure drops from 25 to 31, no single tenant more than 4.1% rentals, and lease expiry profile is very flat. And that is why they were willing to give us that price, which points back to size does matter.
And the same banks that Adrian is talking about are also our banks, and we are never able to get that 2.5. So again, I think it's just a clout that a bigger REIT would be able to, in terms of imposing a lower cost, and that's direct DPU to unit holders already.
Bigger the better.
Correct.
Among the comparable local industrial REITs, why is Sabana picked for this merger? Is it solely due to the sponsor? Sabana may be a smallest industrial REIT now, attributes-wise, not most attractive.
Not really. Sometimes when you want to merge, you also need to take into consideration whether you can digest it or not. We think that with the size of Sabana, they are complementary to us. You do not alter the risk profile too much. Both of us has managed industrial assets. Donald is a veteran in the industry and in terms of the real estate. We have looked at the plans and AEIs that most of the we can do. It's a managed risk. Whenever we do something, you do not want, yes, large is good, but you cannot go over the size. My point is that Sabana REIT is a right candidate for us, given the size that we are. We can manage the risk well, and most important thing, we can arrive at a proposed merger terms that is actually beneficial to both parties, especially on a DPU basis. Yes, you can argue one is higher, one is lower, but when ESR REIT, I would urge ESR REIT owners to look at the whole totality of the whole game plan that in the end that we want to go towards, and that is to get ourselves included in the index stock without altering the risk of the whole REITs too much and exposing ESR REIT unit holders to too much volatility in DPU.
What is the one single most important risk that you need to manage in this merger?
Wow.
Is there one?
Well, the risk is to make sure that that information is provided out clearly. Unit holders questions us, just as we have the right to question people who throw numbers out. And yeah, that is to me, I wouldn't say it's
a risk, but
yeah, it's a risk because when you have this sort of clouded, non-verified, unsubstantiated information that's floating around, and we're in a live situation, it creates uneasiness, it creates uncertainty. When you create uncertainty, it affects share price.
the risk is if you
And the risk
don't,
is very high.
if you don't clear the air,
Yeah.
then you have confused and misled unit holders.
Yes. Yeah.
Yeah.
And that is the reason why we asked the question, why we had to ask the question. It's our duty to actually ask the fund managers and REIT managers of such uncertainties and
So have these two funds sat down with you, come to see you?
For us, when we first started first announced in July, the 16th of July 2020, we approached them, wanted to have a discussion and sit down. They didn't ask us. They rebuffed.
They didn't respond.
They didn't respond. Yeah, they respond through the media, and that started to create a lot of and they responded more. And it's when it created the whole uncertainty. And then that is what it led to me having to say the no price increase, because I have to be responsible to ESR REIT unit holders. Yeah.
So we have actually engaged both the hedge funds, and we welcome the suggestions. If they got interesting suggestions to implement, we'll be happy to look into that as well. And if you look at some of the engagement process, of course, they are looking at different parameters altogether. They are seeing it as a sale of assets, where you sell, take money, and that's it. Whereas we see it as a merger where investors, or rather Sabana REIT unit holders, continue to stay invested in a larger entity in that sense. So if you're looking into the overall scheme of things, they're talking about NAV dilution. We are talking about DPU, among others, being the highest among all the last 5 mergers that have translated and all that. So we'll continue to engage them. But unfortunately, even during the latest, after we released the scheme documents on the 12th of November, we've reached out to them. And of course, they prefer to talk through the press, unfortunately, which is not the best approach in that sense, because we are going through, current proxy voting is already starting to commence. And unit holders, independent minority unit holders, are looking right now to make a decision. We can provide our information through merit, through scheme documents, with IFA reports and all that. But I think, unfortunately, we want unit holders to focus on the actual merit of the deal and to provide their voice in the form of votes, and to be able to go out there and to make their own decision in that sense.
So the last question for tonight is, what are the chances of ESR REIT after merger to get into the indices? Which indices are you referring to?
Yeah, I'll take this question. Definitely if the merger is successful, We will be pass the criteria of the inclusion in indices because our market cap is larger, the free float is larger. So we will be it will put us in a very good position to be included in indices. And the indices that I am referring to is the Holy Grail, which is the ESR-REIT index. Now, if you look at this year, a number of Singapore REITs has got into the index and their share prices has re-rated. I think Capital DC rate Capital DC rate was included in the indices. I think Parkway Life REIT was also included in the indices, and shareholders can go and refer to that. It's the ESR-REIT Developers Index. That
You
is
qualify, don't you?
Yes. With the merger, we do. Without the merger, it will take a little bit more time for us to get ourselves there. But I think we can get ourselves there, primarily because we have ESR pipeline to assess. But it'll take a while. In the meantime, the people who are in the index would probably be inside there. They were getting most of the money, and if they start to be able to get more access to the capital, cheaper debt, and they are able to grow, and they're already in the virtuous cycle, better DPU, then we will take us, the climb will be a bit steeper. So the key index that, to answer the question is that we want to look to get ourselves in is in the ESR-REIT Developers Index.
Well, you heard all the answers to your questions. You have to now make an informed decision. Thank you for joining us. If you have any questions, you can still write in.
Yes.
And I'm sure Donald and
Yes.
Adrian, both of you will answer the questions to the best of your ability. Thank you very much, gentlemen.
Thank you, David.
Thank you very much.
Wish
Thank
you
you
all
very
the
much.
best.
Thank
all
you.
right?
Thank you.
Thank you.